Wow, the market is bleeding. We have stocks like Google that just had unbelievable earnings in a lot of people's minds. They blew out expectations in some ways, and they're down 7.3%. We have other companies like Microsoft being dragged down because of it, negative 3.1%. Amazon's down 5%. They didn't even announce earnings. We have Tesla down 14%. Why is that? Well, Google talked about increasing capex, right? So that's why Google's down at least, and why Amazon and maybe Meta and Microsoft as the other hyperscalers are down. So you'd think this would help out companies like, AMD and Nvidia, because there's going to be massive spend. It's going to go to those companies. Well, no. Nvidia is down 2.5%. What the heck's going on? Let's talk about the market. Let's talk about Bitcoin as well. What I'm going to be doing moving forward, some new escalations that have caused oil to jump up in price. And it's not just a Strait of Hormuz, it's more than that. We also have treasury yields spiking. So what's the best thing to do? Is it get out completely? Is it to go all in? If you've already gone all in, what can you do? We'll talk about all that in today's video. Let's start here. By the way, if you do want to trade crypto, if you want to trade stocks, there are links underneath the video to BYDFi, the UBIT, and BTCC. I actually just had someone that I know that was talking about trading, and they were talking about spot trading, how they were going to be maybe trading a significant amount of money using spot, and they were looking at the fees on Coinbase, and really they're pretty similar to if you use 3 or 4x leverage on any of these platforms. And here you actually get rewarded, and the moves are a little bit more significant as well. I think right now setting up for the next bull run makes a lot of sense. Having 2 or 3x leverage on Bitcoin could do very well. But of course, read their terms and conditions. Make sure you understand them. Make sure you understand how trading actually works. Now, as I said, the market's bloody. We have the NASDAQ down 2.5%. The S&P 500 down 1.3%. The Dow down 1%. And it's just gotten worse throughout the day. Like we're just seeing lower low after lower low. The VIX is up 16.5%. This is the volatility index. Gold's even down 2%. It's almost under 4,000 for the first time in a while, I believe. Oil jumping up 6%. You can see here $100 oil on Brent is back. Brent crude prices are now officially trading over $100 a barrel, up 42% in 20 days. So this is causing there to be extra concerns in the stock market, because with this, the inflation expectations are going up, which means that the Fed is less likely to cut rates and actually raise rates. So we're seeing the 10-year yield jump. It's up to 4.7%. This is higher than it was back in May. This is the highest it's been since January of 2025, and we're almost at the same level there. And then we were a little bit higher back in 2023 when we were at 4.9%. And yeah, the market basically just isn't believing that the Fed's going to be able to continue to cut rates, right? Like interest rates have come down since 2023, and yet the yield is still just about as high. So the market is being freaked out. They're selling stocks and putting it into 10-year treasuries. Because they think this is a safer play moving forward. They think the capex spend is out of control, which we'll talk about here in a second. But we also have some other news for oil. Not great news out of the Red Sea. Houthi forces have claimed strikes on 2 Saudi oil tankers, calling it part of a blockade on Saudi Arabia. That's a second potential choke point on global oil, right alongside Iran's standoff in the Strait of Hormuz. Crews are reportedly safe. I saw an interview by Trump saying that, Iran wants to make a deal, but we're not going to make a deal with them yet because they're not ready for a deal, because whenever we make a deal, they go back on it. Honestly, I've been saying this since it started. I don't think we really have any idea what's happening, and I wouldn't base my investment decisions on what's going to happen with oil. It's super volatile, and obviously, we've had times where it's dropped significantly. We've had times where it's pumped significantly. I'm not trying to trade oil, and I'm not trying to buy long-term assets based on oil's prices. I'll take advantage if my assets that I want to buy go down in price significantly because of oil, because I think this is more of a short-term concern. Now maybe it's maybe it's a week, maybe it's a year, I don't know, but still in my investing journey that is short-term. I think of that as short term. So that's where I'm at with oil and all that right now. Now, Google is what everyone's digesting today. Their revenues grew significantly. So I covered this in a video last night, but just real quick highlights. Their revenue increased 24%. This is up from, I believe it was 22% last quarter. I could be wrong. It might have been 19, but it's accelerating. Right? We're seeing accelerated revenue growth. What's crazy is that Google Cloud, the business that everyone cares the most about, grew 82%. I guess this and just Google Search are the two most important businesses, but Google Cloud grew at 82%, almost doubling in the last year to nearly a $100 billion run rate. Their margins also increased. This company is accelerating revenue very quickly. Now, one concern that people have, they had $9.11 in EPS, but the majority of this is from their SpaceX holdings. So I think they made $94 billion off of SpaceX and another $4 billion from other stuff. So without this, the adjusted EPS is more like $2.88. I've heard $2.88 and $2.85, just slightly below analyst expectations. So revenue beat, adjusted EPS maybe slightly below, which is causing some people concern. But what really, I think, freaked out the market is their earnings call. They raised their capex to $190 billion to $205 billion for 2025. Keep in mind, they just did $45 billion. And that's been ramping up. I think they did like mid-30s before that. So they're expecting another 120 billion or so for the year. And that's just in the next 2 quarters. They did not disclose 2027 capex, but they said it will be significantly more. So the market does not like that uncertainty because Google just actually went free cash flow negative for the first time in a very long time. The first time maybe since they've become a public company. I guess since 2006, it's the first negative free cash flow quarter. And it was pretty significant, billions and billions of dollars. Now, they also diluted shareholders, which freaks out the market. They raised capital, and they're increasing capex very quickly. Capex this quarter, $45 billion. The quarter before was, just under $36 billion. So they went from this highly profitable business with tons of free cash flow, buying back shares, paying dividends, to now diluting shareholders and spending more money than they're bringing in. So they did raise their cash significantly. Part of that is that they sold shares, so that helped. But it looks like they're going to be able to spend a lot more on AI capex. Now, one thing that I'll point out, a lot of people are throwing out this income number, like this $98 billion that they made from other income. They're saying this is trash. We don't care about that. Let's move on to the adjusted EPS. I think you have to spend a minute and realize that this was an investment. Their investment in SpaceX did 100x. They invested in SpaceX and made 100x return, which as a shareholder, you get some of those returns. You benefit from that. They have many times that they've done something like this. Maybe not 100x gain, but they've invested in a lot of different places and gotten really good returns. I think it's important to remember they're some of the best capital allocators in the world. And I know I've said this a lot, but if they see a big return on capex spend, I trust them after some of the other investments that they've made. They've done this for a very long time and been one of the best performing stocks ever in the stock market. They're one of the largest market caps. Now, I realize I repeat myself a lot and it probably sounds boring, but the fact is sometimes you need to hear the same thing over and over because otherwise you can lose conviction. Same thing with a Bitcoin bear market, right? We're in a Bitcoin bear market. And if you hear, every month, oh yeah, probably good to buy Bitcoin. It might not be the same thing as, hey, no, this is the time to buy Bitcoin. This is when we fall down. This is right before, this is the worst part in the 4-year cycle, but the best time for buying. And you hear that day after day. It might sound boring after a while, might sound repetitive, but it's also the best thing to hear, I think, to raise that red flag in your head that, maybe psychologically I don't want to buy Bitcoin, but I know that I should mentally. And I think, a similar thing with Google might be a similar thing with some of these AI spenders where, Wall Street doesn't want them. They're too scared short term, but this is really a decent time to be buying, especially with this much fear and with them being able to put hundreds of billions of dollars into something that they see a big return on. Well, I trust them. So if they're going to fall down, 7.5% in a day, I'm not worried about it, right? I'm happy to hold on to my shares, and I might be buying more here soon. Now, Google is a little bit more richly valued than some of the other stocks that I've focused on more, like Amazon, Microsoft, and Meta. Meta looking like it's going to fall under 600, quite attractive. Microsoft under 380, I think is a good deal. Amazon under 230, a great deal too. Now, on the other hand, like I could always be wrong, but I think this is typically the best time to be buying. Same thing with Bitcoin, right? Like if you're someone that believes that Bitcoin's going to do well in the future, and I think you have to be biting on these dips. I mean, I still think we're going to go down further, but the fact is, like Bitcoin, this is the best time to buy over the next 6 months. This is where we typically always bottom, somewhere around October, November. So yeah, I'll be buying. I'll be dollar cost averaging. It is hard because there are a lot of good deals in the stock market, I believe, as well, but I'll continue to dollar cost average. Now, you can see how bad the market is just by the fact that Nvidia is down, even though Google just upped CapEx guidance and every other company is probably going to do the same. The hyperscalers, like even Nvidia can't catch a break today. And that's largely due to oil and the rotation, I think, over to treasuries, but still shows you the kind of market we're in, where like we've been stuck on the S&P 500 and the NASDAQ for a while. Even though companies' underlying fundamentals get better, people are worried about oil and about treasuries and what the Fed does. But if you can accumulate really good companies at good prices over the long term, you're going to do really well. Let me know your thoughts on this underneath the video. Of course, next week is a huge earnings week. Be on the lookout for that. I'm continuing to trade as well. If you do want to trade, you can check out the links in the link tree. Thank you so much. I appreciate it. I'll see y'all soon. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.